You have probably heard at a property seminar that there are various real estate investment strategies, and now you're trying to identify which one actually works best for you. Today, we will focus on two strategies with the main objective being that you want to focus on cash flow and not necessarily capital gains. So, in this episode, let's explore and analyze which of these two investment properties will be best at cash flowing, and let's look at why. This can be extremely helpful to you when identifying a strategy and, more importantly, a neighborhood or location in which you are going to invest. So, could an old single family home beat a new apartment as a lucrative investment? Let's look into it. Remember, everything I say here does not constitute as financial advice or even property advice, but more like property education. This is strictly for entertainment. Welcome to Compounding Your Wealth. On this platform, we talk about practical ways to make money, and real estate is definitely one of those ways in which we can make money. If you find value in these kind of videos, feel free to subscribe, to like, and to share it, as it gives an indication that you'd like more of these kind of videos, and I am ready to meet that demand. If you're looking to research an area, you probably would start off with the following. Number one, it would be the purchase price. You want something you can afford because you probably have done an assessment of how much you qualify for, and you want something comfortably in your range. Let's compare an old house to a newer apartment. Perhaps they could be, more or less the same amount of bedrooms. It would be a no-brainer that the older house would probably come out as the cheaper option. So if the house is not in a closed estate, then the levies will not be included in the monthly costs, which can have a significant impact on the returns that you would have. So it means the maintenance of the property, the grounds, the insurance, they're all up to you as the owner of the property. If you have a single family house that's not within an estate, that's all up to you to actually maintain and to take care of. This explains why a lot of these properties are not well maintained, because the owner probably just didn't want to take care of it. Unlike with an apartment, you would have the body corporate take care of the grounds and just make sure that it looks good, or maybe it would be painted. It will be taken care of. Now, with the house, on the other hand, if it is not well maintained, this is a golden ticket because it allows you to negotiate down on the price. So, what also gives you leverage with these old houses is the fact that a lot of people who are selling them, they may actually be done paying for the house. So, there is still that room for them to go a little bit lower in price, and that is extremely helpful. Unlike someone who is buying a brand new apartment, they are not likely to go down on the price because they don't want to sell at a loss. So, old houses are definitely the better option in this case. Land space. So a house allows you to build an extra flatlet, which will increase the amount of rooms to rent out. Therefore, more cash is going to be in your pocket. You can build as you like if it is within the legal parameters, but honestly, I don't think any of the people that have done this have actually done so. If you investigate any further, you will probably find that most of these houses with extra outbuildings or additional rooms probably do not have authorized or approved building plans from the municipalities. So these additions are really just not proper, which leads me to think that they probably are not well built, and that is why there is no real space or yards, that they mention here. As you can see, they will say that there's a garden, but there really isn't a proper garden. There's no space for a garden it was not well planned, not well thought out. With an apartment, you are limited to the rooms that it has. So, what the developer has done is essentially do what these homeowners do with their houses, which is to build up. And that is why New York and Dubai are what they are. Skyscrapers, people make money because the sky is the limit. They build more units, and the equivalent of that is the old house with more rooms. So, the next point I'm going to put here is the number of tenants actually adds value. So, yes, there are both 3-bedroom houses. One is an old house and another one is an apartment. But in an old house, you can have many people living in each room. In an apartment, it's possible, but it is unlikely because there'll be complaints, from a security standpoint, the complaints about noise levels, the lack of parking for all the tenants, the separation of electricity bills. All of that can be complicated. In an old house, however, the landlord can do as they want. How they structure the electricity boxes, up to them. The number of tenants occupying each room is their choice. The amount of cars that they can fit into the yard, it's up to them. So owners of these old houses have full control, and that can be bringing in more money. The next point to consider is location. Is it close to amenities such as schools, shopping centers? Is it close to transport? Honestly, that is why even an old looking house like this one can bring so many people, because people want to be close to their place of work. Typically in these houses, you will find people who have small businesses like selling food, they are hairdressers, and they need as much time as they can to be with their clients. They use their daylight hours as much as possible. They don't typically have the option to work from home because they need to be hustling and they need one-on-one contact with potential buyers. So they need a place that is close to their place of business, or they need to be able to catch a taxi late at night if they need to get home. So things like transport are very important. But I'm referring to, less pricey taxis, for instance. For someone staying in these apartments, though, they probably have a standard number of hours that they are working. And if not, they have, the option to work from home, and they can afford nicer modes of transport like the Gautrain, or they have got their own cars, and that is why there is space for parking, which is included in the levy's price, by the way. So it is important to understand the type of client you have and their lifestyle and what they typically need. People want to be close to hospitals. They want their kids to be close to home so that they can participate in sports. They'll use words like a nice tree-lined street, already giving the idea of a nice clean neighborhood with nice views. And if you know anything about real estate, is that you pay for those views. So I will do that in another video. But yeah, you're definitely going to pay for those views. This brings me to the next point, which is about new tenant turnover. Now, I typically find that new apartments are usually not filled with tenants, and this gives the power to the tenants to negotiate on lower rental prices because there is a higher supply but lower demand of rented units. Now, with a house that is renting out each room, I find that there's always a tenant, and even if one tenant leaves, it doesn't really hurt your pocket because there's still money coming in from other rooms that you have leased out. So you're not waiting months on end for one tenant. This way, you are not falling behind on monthly mortgage payments, and you are cash flowing positive most of the time. And it may take much longer before you start making a loss. Why are some of these rented out old properties staying in these terrible conditions? Well, it's because there's still a demand for them, even if they're not fixed. That shows the power right there. Where there is a demand and there is very little supply, because there are more people who are at the lower end of the financial spectrum than the rich people, then automatically the demand will be more, pushing up the prices as time goes on, unlike in these really nice apartments, because you find there are fewer people who are able to afford, and it goes in the opposite direction where the prices actually go lower. So even with this point, it definitely means that people who are renting out each room at these old houses actually could be making way more money than those who are renting out these really nice apartments. Not to mention that the levies increase in some cases yearly, so it's also eating away at the profits that you will have. Another thing for you to consider is the job opportunities in those areas. So, how much do your tenants actually earn? Can they afford this? And like I said before, if there are fewer people making a certain amount of money, then it's going to be difficult for you to get new tenants. And if there aren't enough job opportunities going around, then you may be stuck with a property that is cash flowing negative, because you're going to have to be paying out of your own pocket. Now, obviously, you would need to run the numbers for you to have a precise or a more clear picture of whether this property or that property would make more money. But these are some of the things that you would need to consider. And by the looks of things, at first glance, the old property seems like the better option for cash flowing positive than the brand new apartment. But you're gonna need to take a deep dive into the numbers. You really need to run the numbers before you can make any kind of decision. So, if this is the strategy for you, you want more cash flow, you probably should look into investing in these old houses, because there are more rooms, there's more space, and there's a lot more for you to work with. And just bear in mind the type of clients that you're going to have. More clients, which means you're going to have more personalities you're going to have to work with. And if this is something you are comfortable getting into, then it's really something for you to try and explore. Thanks for watching today's video. If you found value, please do not forget to like, to share, and to subscribe, and check out the next video.